Welcome to The Explainer. Today, we're going to dive into a pretty big idea, a financial model that's trying to do something really ambitious, pull together two completely different worlds to build something new. So here's the big question driving this whole thing. It's a shot at fixing two huge headaches for investors everywhere, whether you're a big institution or just a regular person. You've got insane volatility on one side, and on the other, stability that's just out of reach for most people. All right, so to really get what they're trying to do here, you first have to understand the fundamental conflict they're trying to solve. It's basically a tale of two markets that couldn't be more different. So think about it like this. On one side, you've got the whole crypto world, right? It's famous for its incredible pace of innovation, but let's be honest, it's also known for wild, chronic volatility. A lot of the time, it feels like it's driven more by hype than by any real-world value. Then, on the other side, you have traditional real estate. You know, the bedrock of wealth for centuries. It's stable, sure, but it's also a nightmare to buy and sell quickly, it costs a fortune to get into, and you're pretty much locked into one city or country. Okay, so how in the world do you bridge a gap that wide? Well, Palladium's answer isn't just to launch another trading app. It's presented more as a whole new philosophy, an economic vision for how finance could work. And this quote from their white paper really nails it. The whole model is built on two pillars that are meant to support each other. You've got a real estate anchor to keep things steady and an arbitrage engine designed to boost returns. Okay, let's start with the anchor. The foundation of this whole system is something real, something you can actually point to. Real estate. But it's real estate made accessible in a way that's pretty new. And this is where it gets really interesting. Through a process called tokenization, they can take a single multi-million-dollar property, think a luxury apartment building or a prime office space, and digitally chop it up into thousands of little tradable pieces. This opens the door to what's called fractional ownership, basically turning a giant, hard-to-sell asset into something you can trade as easily as a stock. But here's the thing. They're not just tokenizing any old building. Before any property gets the green light, it has to survive what they call the due diligence gauntlet. I mean, it sounds intense, right? It's a super rigorous four-stage check that looks at everything from the legal paperwork and climate risks to the local infrastructure and even how the building fits into the community. The idea is that only top-quality, stable properties make it through. And why does all this matter? Well, the whole point of this pillar is to create a bedrock of stable, predictable income that's tied to actual real-world value. It's about taking an asset class that's historically been one of the safest ways to store wealth and, well, democratizing it. All right, so that's the anchor. Now let's talk about the engine. If real estate is what keeps the ship steady, the arbitrage engine is the motor designed to push it forward, boosting returns and hopefully bringing a little more logic to the chaos of crypto markets. So what is arbitrage? It's actually a pretty simple concept. You're basically a super fast shopper, finding the same item for a slightly different price in two different stores or exchanges, buying it at the lower price and selling it at the higher one, all in a split second. In the crypto world, where one token can be trading at different prices all over the place, these little gaps pop up all the time. Palladium's engine is built to automatically hunt for them and capture that difference as profit. And the fuel for this whole engine? That's the PLLD token. As you can see, the initial supply is carefully spread out to fund everything from development and marketing to making sure there's enough liquidity in the market for everything to run smoothly. Now, this is the really clever part. They've created a system that directly links the token's value to how well that arbitrage engine is doing. Here's how it works. A slice of the profits from all that trading is used to buy back PLLD tokens from the open market. Those tokens are then moved into the company's treasury, which takes them out of active circulation. It's a direct mechanism designed to tie the token's market dynamics to the engine's real-world performance. Look, let's be real. An idea this big, especially in the crypto space, is absolutely worthless if people don't trust it. In a world that is, for good reason, skeptical of new financial projects, building trust isn't just a nice-to-have, it's everything. So they're tackling this head-on with what looks like a whole framework of institutional-grade standards. We're talking about things like independent audits, following global rules like Europe's big MiCA framework, showing performance on public dashboards, and having top-notch cybersecurity. It's all about building confidence and being accountable. And this right here, this is a huge signal of long-term commitment. we're looking at the vesting schedules. In simple terms, this means the team and insiders have their tokens locked up for a long time. They can't just dump their tokens and run after a few months. It's designed to prevent big sell-offs and make sure everyone's interests are aligned for the long haul. So when you step back and look at the whole picture, you've got the stable real estate anchor, you've got this dynamic arbitrage engine, and you've got this deep focus on trust. What's the end game here? What kind of future are they trying to build? And again, a quote from their white paper really sums up the big dream here. The ambition isn't just about creating another way to invest. It's about contributing to a much bigger shift, a move toward a more rational financial system where an asset's value is actually tied to real productivity and growth, not just to rumors and hype. You know, the vision itself is really powerful, grounding the fast-paced world of digital finance with solid, tangible assets. But, and it's a big but, success hinges on flawless execution, navigating a spiderweb of global regulations, and proving it can hold up when markets get turbulent. It really leaves us with a fascinating question about what the future of finance could look like.